Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking at this hour. Airlines will soon get pricing power back. Government removes the minimum and maximum cap on domestic airfares from the 31st of August. The government mandates that airlines share details of all international passengers with the Customs Department for risk analysis. Says the data must be shared at least 24 hours before departure. The list includes sensitive information like credit card details. Government sources deny a Bloomberg report about a potential ban on Chinese smartphones priced under 12,000 rupees. Sources say no such proposal is under consideration. Chinese Foreign Ministry calls for a non-discriminatory business environment for Chinese companies. RBI tightens the rules governing digital lending in India. Says only regulated entities like banks and NBFCs will be allowed to disperse loans and collect repayment. Prohibits any money transfers going through a pass-through or third-party account, as the digital lending apps can collect data only with explicit prior consent of the borrower. U.S. consumer price inflation eases to a better-than-expected 8.5% in July against 9.1% a year ago as lower fuel prices offset rising food prices. Core inflation, which excludes food and energy prices, slips to 0.3% from 0.7% in June. The Wall Street ends flat once again after another heavy, volatile session. Weak global cues keep multiple attempts at a rally in check. The rupee strengthens on the back of global dollar weakness ahead of the U.S. inflation data. Nitish Kumar takes oath as the Chief Minister of Bihar for a record 8th time. After breaking the alliance with the BJP and joining hands with the RJD and Congress, Tejasvi Yadav also sworn in as Deputy Chief Minister. Justice Uday Umesh Lalit has been appointed the 49th Chief Justice of India. Justice Lalit will be sworn in by the President on the 27th of August, a day after current CJI N.V. Ramana retires. With an eye on reducing dependence on China, U.S. President Joe Biden signs a legislation to boost semiconductor manufacturing in America. The bill has an outlay of $280 billion and promises to offer subsidies worth over $52 billion. Elon Musk sells Tesla shares worth nearly $7 billion, despite promising he would not do so earlier this year. Says he's now done selling shares, adds the sale was important to avoid any emergency sale of Tesla shares if Twitter forced him to close the $44 billion deal. Also on the show tonight, a visit to the silk weaving town of Kanchivaram in Tamil Nadu shows how a tapestry of traditions is fraying down the middle. A special report on what's ailing rural India. Before we get to all of that, let's quickly wrap up the day's market action for you. Equity markets closing flat after another volatile session. Weak global cues weighed on sentiment. Numerous attempts to break into the green fizzled out. And so while the Sensex ended marginally lower, the Nifty ended with modest gains supported by metals and capital goods stocks. And in the currency market, the rupee strengthened against the dollar on the back of global dollar weakness and easing global crude oil prices. The Indian currency ending the day 14 paise stronger at 79 rupees and 52 paise to the dollar. Speaking of global crude oil prices, a fair amount of volatility has set in after Russia cut exports to Europe through the Druzhba line. Traders are assessing the supply shortage this move could trigger, with whether muted demand due to a global slowdown will offset the lower supply. Brent currently trading around $96 a barrel, slightly higher than its previous close of about $94. And the much-awaited U.S. consumer price inflation is out. It's pointing to some good news. Inflation has started to ease more than expected to 8.5% in July from 9.1% a year ago. And this dip comes as lower fuel prices have offset a sharp rise in food prices. Core inflation, which excludes food and energy prices, has slipped to 0.3% from 0.7% in June. Remember, global markets were waiting for these numbers to assess whether the U.S. Central Bank will consider easing up on the rate hikes. The Nasdaq jumping 2%, the Dow soaring by 400 points soon after the numbers were released. But some analysts worry that while the easing is a good sign, it may not be enough to signal a pause by the Fed. Back home, India's civil aviation market is gearing up for fierce competition among airlines. The government has decided to do away with the fare caps from the 31st of August. Remember, the government had imposed a limit on the airfare that can be charged when air travel opened after 2 months of the shutdown in May 2020. Anu joins us now with more. Anu.
Well, in a long pending move, the government has decided to do away with the fare caps with effect from August 31st. Now, just to give a bit of a recap here, remember the Civil Aviation Ministry had put an upper and lower limit on the fare which an airline could charge a passenger when the civil aviation sector resumed operations in May 2020 after shutting down for 2 months due to the COVID pandemic. So here the government had formed 7 categories of fares depending on the air distance, and each category had a upper limit as well as a lower limit. So for example, the lower limit for a Delhi-Mumbai flight was 3,500 rupees, and the maximum that an airline could charge for the same route was 10,000 rupees. Now these limits have been revised multiple times over the last 2 years to adjust with the external factors such as fuel. The government had said that this capping of fares was done basically to prevent the sudden surge or decline in fares. Now, 2 years later, we learned from government officials that the decision has been taken to remove the fare caps as the demand is stable, which is currently hovering around 75 to 80% of pre-COVID level. And there is also a relaxation in ATF prices, which recently saw a 12% cut. As far as airlines are concerned, some are elated at the move. For others, it may put pressure on their revenue environment as the competition will become fierce and the fares will be governed by the market forces of demand and supply. There could be more windows of discounted fares, but during travel or festive season, the fares are likely to be very steep. Aviation consultancy firm Kappa India said that it hopes airlines maintain a sensible pricing regime and don't revert to loss leader fares, but cautioned that the yield dilution is inevitable. Back to you.
Anu, many thanks. And remember, the decision to remove the airfare caps comes a day after Civil Aviation Minister Jyotiraditya Scindia told us that the review of the caps was on the agenda.
On fare caps, that's something that, as you know, is on my dashboard. I will not divulge to you or to CNBC when I propose to take a decision, but let me say this, that it will be taken in the interests of the sector at the appropriate time.
And staying with aviation, airlines now have to share PNR details, travel itinerary, among others, for all passengers flying in or out of India. The government has mandated that airlines share details of all international passengers with the Customs Department for risk analysis. It says the data must be shared at least 24 hours before departure. Now, the list includes sensitive information like credit card details. Timsy Jaipuria joins us now to take us through the changes that the CBIC has notified. Timsy, take us through what the CBIC is asking for.
Traveling abroad, booked your ticket via credit card or through your travel agent, requested for a particular seat? Well, Customs Department is keeping a close watch. According to the newly notified Passenger Name Record Information Regulations 2022, all international airlines have been mandated to share details of all international passengers with the Customs Department. According to the notification, which has come into effect from 8th of August, the details have to be shared with respect to prevention and prosecution of offences under Customs Act. The data needs to be shared at least 24 hours before departure, and in case airlines fail, a minimum penalty of 25,000 rupees and a maximum of 50,000 rupees for every act of non-compliance can be levied by the Customs Department. So what all information needs to be shared? Well, it includes the PNR number, date of travel, credit card details, locator code, date of reservation and intended travel, whether the passenger is a frequent flyer or not, information on other benefits such as free tickets and upgrades, billing information, and much more. As per the new notification, Customs will keep all this information at a database called National Customs Targeting Center for Passengers, and the data will be used for risk analysis of passengers. CBIC can further share this data with other law and enforcement agencies, government departments of India, or any other country. The data will be retained for 5 years, and post 5 years, the data will be disposed of. However, the data can be repersonalized and unmasked in specific cases. Let's see how well this move is received by travelers and how smoothly airlines are able to do the data sharing, something that only time will tell.
All right, Timsy, many thanks for joining us. Now, after cracking down on Chinese mobile companies over alleged tax evasion, Bloomberg reports the government is considering a ban on Chinese firms from selling their smartphones for below 12,000 rupees in the Indian market. The move is believed to be intended at promoting local smartphone brands. CNBC-TV18 reached out to the government for a clarification, and sources say there is currently no such proposal under consideration by the government. As on date, Chinese companies hold nearly 66% market share of India's smartphone market. According to a report by Counterpoint Research, Chinese smartphones form 80% of the sub-12,000 rupees smartphone segment, while Indian companies hold only 3 to 4%. Take a look.
Well, I think we cannot ask any ban to be imposed. We are asking for the right level playing field because, our per capita is 17% of China. The moment we'll create scale and skills, we'll be the most competitive in the world. That's the process every country has gone through. And I think we are asking for us to be developed and grown and not, anyone else to be, sidelined or whatever. So that's not our ask.
I think we've been misinterpreting the government intentions at this point of time, where we are focusing, as we have spoken to the authorities, we are mainly focusing, or their focus is mainly on the exports, building the local supply chain ecosystem, which is the most important thing, and the exports. I think that's what we've been focusing on, and we've been closely monitoring.
The other big story today, the RBI has tightened the rules governing digital lending in India. It says only regulated entities like banks and NBFCs will be allowed to disperse loans and collect repayment. It's also prohibited any money transfer going through a pass-through a third-party account, adding that digital lending apps can collect data only on explicit prior consent of the borrower. In Earnings Corner, it's an all-round performance for Hindalco in the first quarter. Profit after tax seeing a 59% spike year-on-year. Hindalco's aluminum business has seen a massive beat on the margins front. Tata Consumer Products first quarter profit has seen a 38% spike compared to the same period last year. Margins coming in at close to 14%, meeting street expectations. Eicher Motors reporting net profit of 611 crore rupees in the first quarter. That's an increase of 157% compared to the same quarter last fiscal, when the COVID second wave was at its peak. Revenue was up 72% year-on-year. Indian Hotels CEO Puneet Chhatwal tells CNBC-TV18 that limited capacity and growing demand bode well for the hospitality sector, adding the demand for hotel rooms will outpace supply.
Supply will be constrained. Not many new hotels have got funded or will get funded in the next couple of years. So that means demand will outpace supply. When demand starts to outpace supply, the rates are expected to grow. Second, rates also grow when the inflation starts kicking in. So for us, I think it's very positive because we have the ability to charge on constrained supply, ability to charge on the basis of what's happening around the market. So domestic is very strong. Even this was to plateau or come down a bit when international kicks in, which is 15% of our revenue traditionally.
Justice Uday Umesh Lalit has been appointed the 49th Chief Justice of India with effect from the 27th of August. The decision comes along expected lines days after outgoing CJI N.V. Ramana recommended Justice Lalit's name to the government. He is expected to have a brief tenure, though, of 74 days. He's set to retire on the 8th of November. Justice Lalit was part of the 5-judge bench that held triple talaq to be unconstitutional. The government has approved biological Lee's COVID vaccine, Corbevax, to be used as a booster dose. This dose will be applicable for people inoculated with either Covishield or Covaxin. This is the first time that India is allowing booster dose vaccine to be different from the one that was used for primary vaccination. The development of enterprise and service hubs, or Desh Bill, will be tabled in Parliament's winter session. Sources say the bill won't be introduced as an ordinance. Through this bill, the government seeks to go beyond export-oriented manufacturing and focus on boosting additional economic activity, generating employment and integrating various industrial hubs. Nitish Kumar's flip-flop politics continues. Janata Dal United Chief Nitish Kumar was sworn in as Bihar's Chief Minister for a record 8th time, along with Deputy Chief Minister and RJD leader Tejasvi Yadav. The swearing-in comes a day after Kumar ended his alliance with the BJP and returned to the Mahagathbandhan, an alliance of 7 parties, including the RJD, the Congress and the Left. The BJP, still smarting from Nitish's latest switch, has criticised him for betraying the mandate of the people. Nitish, on the other hand, has said the decision to walk out of the alliance was based on his interaction with party legislators.
इतना तो जरूर कर दीजिए ना कि 14 में जो आए 24 तक के आगे रह पाएंगे कि नहीं रह पाएंगे वो हमारा सवाल है।
अब बिहार के जनता के लिए बहुत अच्छा हुआ है, बहुत बिहार के जनता के हम धन्यवाद देते हैं।
तो नीतीश जी, ये केवल नरेंद्र मोदी का अपमान और नरेंद्र मोदी के साथ विश्वासघात नहीं है, ये बिहार के जो अति पिछड़ा समाज है जो 30% पिछड़ा है उसको आपने अपमानित किया है।
Time for us to head into a break, but up next, a visit to the silk weaving town of Kanchivaram in Tamil Nadu shows how a tapestry of traditions is spraying down the middle. A special report on what's ailing rural India when we return. US President Joe Biden has signed the CHIPS and Science Act to revive semiconductor manufacturing in the US. This is among one of the recent initiatives of the US government to tackle inflation and prevent a recession. Biden said that 1/3 of core inflation last year was due to higher prices for automobiles and the shortage of semiconductors. Parikshit standing by with more on what this bill holds. Parikshit.
The US President Joe Biden has signed the CHIPS and Science Act after it received bipartisan support in the US Congress. The act allocates at least $54 billion towards boosting America's semiconductor manufacturing and leadership in future technology. $39 billion has been allocated for manufacturing incentives, $2 billion for legacy chips used in the auto sector and defense systems, $13.2 billion in R&D and workforce development in the semiconductor industry in the US, and 25% tax credits for capital expenses. Now, what are the conditions for investments? Well, the companies must show significant investments towards generating employment and community development, support small businesses in the United States. They cannot build facilities in China. This is important. And other countries of concern for the United States, they also cannot use incentives for share buyback or shareholder dividends. And not just chips. $1.5 billion would go towards promoting wireless technologies, especially those based on open and interoperable radio access networks. $10 billion in regional innovation and technological hubs across the United States, and expanding investments in STEM education to give America's students better access to high-skilled jobs in the future. Now, in the run-up to the signing of the CHIPS Act, Micron has announced $40 billion in investments in memory chip manufacturing. This could create 40,000 new jobs, according to the White House. Qualcomm and Global Foundries have also announced a $4.2 billion chip manufacturing partnership, and Qualcomm has also promised to increase semiconductor manufacturing by up to 50% in the next 5 years. Now, over the last 30 years, from 40% of the global capacity in semiconductors, the United States' share has declined to 10%. And this was a major concern for the US government and also the US semiconductor industry. 3/4 of the global chip manufacturing capacity is concentrated in East Asia, and China is projected to command the largest share of global chip production by 2030. This is what US wants to check: China's growth in chip manufacturing, and is treating it as a national security issue.
Parikshit, many thanks. Now, rising cost of living has made the first half of 2022 a difficult year all around, more so for Kanchipuram's handloom industry, which is considered among India's most vulnerable cottage industries. In our special series, What's Ailing Rural India, Jude Sanet travels to the temple town to find that the thread holding the industry together is unravelling and fast and threatening its very existence.
At this handloom unit in Kanchipuram, sari making isn't happening at a fast clip. Just 2 years ago, these looms would weave out 15 saris a month. Today, weavers are lucky if they get orders for 5. But that's not the only problem. Supplies, in this case raw silk, have been hard to come by. Over the last 6 months, Kanchipuram's weavers have been dealing with a pronounced supply problem concerning raw silk procurements. India's silk imports from China have nearly halved in this period, but it has not been met with equivalent domestic production. That's left weavers here with escalating costs, even amid unsatisfactory sales. The cost of raw silk has surged from 2,500 rupees a kilogram in December to over 6,000 rupees per kg. Demand for silk saris has not risen significantly in the so-called post-COVID period, and shops are in no hurry to stock up, preferring to exhaust existing supply. A snap poll of retailers in the area reveals that procurement has dropped by a whopping 75%.
Shopkeepers tell us either sell us saris for the old rate or we're not interested. They simply won't buy from us if we even go so far as to talk about revising prices. You can't blame them. They can't increase their retail prices either, since they will be questioned by customers over a sudden price hike.
Work hasn't been good for over a year, ever since the second wave of COVID. And it's not just weaving, but many other sectors that were affected. At one point, some of us did not have enough to feed ourselves.
I have a pile of saris lying unsold. We end up selling our finished products to sari stores only when asked. Until then, they end up lying here.
The situation has thrown an already struggling cottage industry into disarray. This relatively smaller handloom is among a handful still open in the area, but barely. Ironically, it is in a part of town earmarked for smaller handlooms. Sundaram, a Kanjivaram silk weaver like his father and grandfather before him, says abysmally low wages haven't been hiked in 15 years, and so his generation will be the last to man the handloom.
I fall short of 6,000 to 7,000 rupees on average per month in my earnings when compared to what I used to earn before COVID. This trade ends with my generation. Nobody is going to continue it in the future as there are better jobs on offer. Even my son doesn't want to do it because there is no work.
Weavers say a temporary fix to their problem is possible if input costs are passed to the customer. But at once buzzing showrooms that are hardly seeing footfalls today, shopkeepers say they simply will not hike prices.
It's not possible to increase prices. There's a perception on how much a basic wedding sari would cost, and that is about 30,000 to 40,000 rupees. So there's no way customers will pay 60,000 rupees for that sari. At the most, we can hike prices by about 5%, but not more.
This leaves weavers pinning their hopes on a Diwali boom for better orders. But even that may not make it a cracker of a year in this industry. In Kanchipuram, Jude Sanath.
Challenging times there continue for the weavers in Kanchipuram. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18.